Hello everyone and welcome. Good morning. Thank you for joining me today. This is Yanko speaking. I hope you can all hear me well, and I'll immediately share my screen. So thank you for joining me, and there aren't many attendees at the moment, but as always, I'm sure in a few minutes more will join me or will join us. Okay, just let me share my screen. I hope you can all hear me well and see the screen, so if you can just write a small note here, a question telling me that you can see and hear well. Before we start, a small market review, as always. Okay, thank you, Malgorsata. A small market review here. Yesterday I drew a line here on the Aussie dollar on the hourly chart, and this line up here, and I said that it's the webinar was here around this time last night or yesterday evening, and I drew this upper line and said that this may serve as a resistance, and we have this channel here. I don't know if maybe it's a straight channel or or even a wedge, a rising wedge, but we can look at it maybe as a straight channel. It depends on how we stretch the line here. I showed yesterday this area of support from the lower trend line. Let me maybe change its color. Okay, we have two lower lines. One is the one I stretched in blue from this wick here, from this bottom to these areas, okay, to these bottoms, and we saw that it served as support here. And you see here that it also gives some support to the Aussie dollar. The lower line, okay, the lower let me just remove this moving average and this one, and you know what, I'll even remove this one. Okay, the lower red line here is just a parallel line of this upper line, okay, that I stretched here. So you can see here, oops, sorry, you can see here that this upper line gave us resistance along with the resistance of the pivot lines here. Okay, so we have two resistance, and you see how the candle went up around almost 20 pips and then went down and closed right below this trend line. And the lower line, the lower red line, is just the parallel line. And what I did is I'll show you how I create parallel lines. I mark this line, okay, by clicking it or double clicking it. It depends on how you defined your selection, is whether it's by one click, a single click, or a double click, okay, on the under the options tab, the options window, okay, Control O or Tools Options, okay. And there, under the objects, you can select it by a single click. So I select this line, and then I press the Control button in my keyboard, and then from the middle, okay, from the central point, the middle point here, I drag the line to create a parallel line, okay. So if the Aussie dollar breaks, this blue line, this lower line, this trend line, which I stretched on the lower wicks here of these candles, if it does break it, it may find another support on this red line along with the support from the pivot lines. But it remains to see whether in general the Aussie dollar is going to break this channel and continue moving down, or eventually it will find support and breach this channel and continue moving up. The general trend, just a sec, okay. The general trend here is still an uptrend, and you can see how, let me just, okay, you can see how the Aussie dollar is still supported by the trend, by the moving averages, and even by the 200 moving average on the daily chart. I remind you that it's an important moving average. But you know, it may very well eventually break, and there might be a slight divergence here, maybe the beginning of a divergence. You see between these peaks going up on the daily chart and these peaks may be going down, but it's only a possibility. It's not. Here there is a stronger divergence. Okay, here we can see the stronger divergence. These peaks are going up and these peaks are going down, and these peaks on the MACD are also going down a little bit, and we have this reversal candle. So we may see the Aussie dollar maybe moving down a little bit more, but you know, it remains to see. I think it first needs to, in order to really show us reversal, we need to see the Aussie dollar breaking this support line, okay, which was strong resistance. You see here strong resistance, and here strong support from these candles here, on these candles. So so we still need to see how, let's just change the color. Okay, we still need to see how the Aussie dollar reacts to the channel that I showed you earlier. That's one thing I wanted to show you before we start. And another thing I wanted to show you, I remind you, I mentioned yesterday that the pound dollar is consolidating. It's a long consolidation. It seems maybe that the pound dollar broke this symmetrical triangle, and you can see here how it broke with quite a decisive candle. So we may see the pound dollar continuing going down. And if I just show you one more thing with the pound dollar, again, I remind you, we spoke about the importance of the 200 moving average. Okay, so here's an example of this moving average along with resistance lines. Okay, so you can see how strong the reaction to a combination or to a lining up of two indicators or support and resistance with other indicators. In this case, the 200 moving average along with this resistance line really gave a strong move here, about 25 pips within 20 minutes. And it seems like, just like we saw before, that the pound dollar broke this symmetrical triangle. Technically, it's about an 80 pip triangle, 80 pip height triangle. So maybe, I don't know, maybe we may see a strong move of 80 pips, maybe more, maybe less. You can always check a possible retracement with Fibonacci, okay, especially with previous support and resistance. For example, here, okay, we see Fibonacci with Fibonacci 61.8. It's a strong level with this support level. So, and let's see how much we have. We have about 90 pips from the breaking of the triangle, which is more or less the height of the triangle. So technically, we may see the pound dollar move all the way down to the 61.8 Fibonacci. Obviously, it may stop even before. It can even continue more than that, especially after this long consolidation. But these are the things you should take into account when analyzing and you know, saying, okay, let's say I enter this trade and I risk, I don't know, 20 pips or 30 pips. What is the potential profit? If the potential profit is about 60 or 90 pips, then it's worth it. Okay? And of course, you should be aware of these levels, because in these levels, the pound dollar may reverse strongly, okay, just like it did here. So be aware of these areas and these patterns. And okay, so that's one more thing I wanted to show you. And you see that the Aussie dollar continues moving down. Okay, so again, let's see. You see here that's another possibility for, okay, I stretched, okay, that's one trend line, one possible trend line here. I actually showed you another trend line, a different trend line. It was this trend line, I think, from this top to this top, yeah. Okay. Okay. Again, we may see the price react to either trend line. I don't know if it'll be this one, or again, maybe it'll be this one here. So let's wait and see. Maybe later on during this session, we'll see how the Aussie dollar reacted. Okay, another trend line here, moving average 52. We'll see. Okay. I want to show you two things today. I want to continue a little bit more with what I showed you last evening. For those of you who were here, and for those of you who weren't, it'll be maybe new. But I showed yesterday. I spoke about consolidation zones mainly on the pound dollar with 30 pip high rectangles. And let me again show you what I was talking about, and we'll just see a few more examples, and then I'll show you another sort of method with moving averages. Okay, maybe I'll start today, and maybe we'll continue with it next week. So what I discussed last evening was consolidation zones, and we spoke about finding or eyeballing and tracing these consolidation zones, which were 30 pip high on the pound dollar on the 15-minute chart. You can always find consolidation zones on higher time frames or lower time frames with smaller rectangles. If I say triangle, I mean rectangle. Okay, so let's just draw a 30 pip high rectangle. Sorry. Okay, here we have this triangle, and this rectangle, and what we're looking for is to see consolidation zones of about this height. Okay, and these consolidation zones are more or less somewhere between a dozen or a couple of dozens of candles, okay, 1 dozen to 2 dozen candles. Sometimes the consolidation zone may even be longer. And what we were looking for is the breach or the break of breaching or the breaking of this rectangle of this consolidation zone. And I spoke about these consolidation zones as dynamic zones, meaning when the price moves, if you see the consolidation moving a little bit, for example, here you see this consolidation and then the price keeps moving and consolidating a little bit further down, then be flexible and move the artifact, okay, the rectangle. Don't think that if a consolidation started here, then necessarily it will keep the same height. If you see that the consolidation keeps moving a little bit, then just be flexible with the artifact until you see a decisive candle breaking the consolidation zone, breaking out of the consolidation zone. And we also created, after we decided where the consolidation zone is, we created another artifact, okay, a different color, let's for example take I don't know this blue, or let's not take blue. Let's take I don't know, this orchid with 3-day you know what, here, with a more or less 3-day length, okay, and you can move it around the smaller artifact, okay, the same values, the same price values, okay, but longer. And with this artifact, what it helps you when the price keeps moving in the future, you still have this artifact to warn you of possible retracement and going back to the consolidation zone, and possible consolidation again, okay? For example, if we see here, let me just move these. Okay, let's say I see this consolidation here. Okay, I see a consolidation. I'm not sure exactly where it consolidates. Let's say eventually I set it like this, okay? Because here it moves up and down and up and down, and I'm not sure exactly. Okay, maybe I say this is the consolidation. I see that the price keeps consolidating here. Then I move it again, and I decide that this is my consolidation zone around here. Okay, and I see that the consolidation zone here gives me, the lower part of it gives me some resistance. I say, okay, this is my consolidation zone. And you see that a day later, the same area, the same consolidation zone, gave another resistance and another small consolidation around the same area. Okay, so when you see a consolidation zone and you decide that this is a good consolidation zone, and you set this larger artifact around it, later on you may see support or resistance, okay, in this case resistance, in this case support, okay, and you see here this again consolidation around here at the same area. So you should be aware of these areas, and always keep looking for consolidations, okay? For example, here consolidation, we see here the price consolidating around 30 pips, breaking out, returning, checking this area, and if I put the larger artifact, you see again here some hesitation and again breaking out of this area, okay? So this artifact just shows you, okay, or just reminds you that when the price comes back to this area, you should be aware of possible consolidation or possible support or resistance from the same area. Okay, and you can see here again consolidation somewhere around here, again, okay, or here, for example. So, sorry. Let's take this. Okay, so here, for example, the price, it didn't even return to any consolidation zone. Okay, here, for example, the price broke out of the consolidation zone, and you see here that the consolidation zone again gave some resistance. The price came back to the consolidation zone and eventually broke out again. Okay, so when you see return to the consolidation area, okay, this is support and demand area. In this case, there was high supply and demand. So you can see here high supply, and eventually when the supply ran out, okay, and there started to accumulate demand here, it was strong demand, and eventually it broke out. So again, these artifacts help you making better decisions when the price eventually comes back to these areas and reacts or breaks out of these areas. So this is what I was talking about last evening, and we'll, if we, let's say in the next few weeks, if I see consolidation zones and either at the same day of the webinar or previously, and in hindsight, and I'll analyze with you these consolidation zones. These are the artifacts I'm going to talk about. And again, with the pound dollar on the 15-minute chart, and also with the euro dollar on the 15-minute chart, more or less what we're looking for is 30 pip high consolidation zones. Obviously, sometimes there are higher consolidation zones or lower or tighter consolidation zones, but these are the ones we'll be looking for. And you can always play with different currency pairs and different different time frames. Currency pairs and time frames give you possibly different artifact heights. Okay, so it may be instead of 30 pips, maybe 25 pips, or maybe 40 or 50 pips if the pair is more, if it has more volatility, or if it has higher spreads, and or if the time frame is higher, then obviously you may see sometimes larger consolidation zones. Okay. Well, we can see here on the pound dollar that it broke this area of support. Okay, so we may see further decline from the pound dollar. Okay, you see breaking such a long consolidation zone after even it started already about last Friday, and we have Monday, Tuesday, and Wednesday here. About 3 days consolidation in this triangle, eventually breaking out, may give us, just like I said earlier, a strong move. Okay. It's still not too late to join this trend, and what I'll show you now is one method of trading trends and joining trends and adding adding more trades, or scaling in trades, scaling in trends with extra or additional trades when the trend is strong. Okay, let's just okay, the Aussie dollar is still here somewhere between the pivot line and the support line. We'll wait and see what happens with this currency pair later on. Okay, let's open a new chart here. Let's take the euro dollar for example. I'll show you a nice simple method with moving averages. Okay, it's part of a much more complex trading method, but I'll show you really the basic lines of it, which is, oops, sorry. Let's take, okay. Yeah, somehow the 15-minute chart here on the demo account doesn't look very good. Okay. What we'll do now, and you can all do it yourselves now at the same time, we'll add some moving averages. And these moving averages will set the base for the trading method I'm going to show in a few minutes. So all the moving averages I'm going to show are exponential, and they're all exponential. They're all exponential, and some of them are shifted. And we'll start with the home base, or the longest moving average, and and then we'll add the shorter moving averages. So the home base is the 144 moving average. Okay, again, exponential. Pick your color, it doesn't matter, and I'll just make it a bit thicker, and you can even add moving averages around it if you want, or just add levels to it. For example, let's add 50, 5, or you know what, let's try it, and -5. Let's see how it works. Okay, I think 5 is a bit too thick. Let's try 1. Okay. This is the home base. The lines, the levels around it are just to make it more apparent or a bit thicker, but it doesn't really, they don't have any special meaning. Okay, and you don't even have to add them. You can just leave this this home base line with no levels around it. Okay, it's up to you if you want to make it very apparent or not. The other moving averages I'm going to add are also exponential. So let's start with the first moving average, 5. I spoke about it several times. I told you this moving average is, for me, the fastest I put on my charts. The price usually reacts to this moving average first. Okay, so 5 moving average exponential. Okay, again, these are the parameters. Let's just see. 5 exponential close. And then let's add a few more, but the other ones I'm going to add are shifted. Okay, and they're all, as you can see, they're all Fibonacci numbers. Okay, I mean the shifting of these moving averages is all Fibonacci numbers. So we'll add some of the moving averages we spoke about. 9. Okay, let's make it yellow, and we'll shift it 3. Another moving average is 13. Let's color it red, and we'll shift it 5. Okay, just like the alligator, if some of you know this indicator. And another moving average is 26, and we'll shift it we'll shift it 8. 8 candles forward. So this is basically the setup we have. Okay, you can name it however you wish to name it. For example, you know what, I don't think there's alligator here. Okay, let's name it alligator. And basically this the trading method is, again, like I said, for joining and grasping the most, or taking out the most of strong trends. I don't like the way these 5-minute candles look here. They look very choppy, and I'm sure it's just because it's a demo account. So the 5-minute candles here I don't think they're now they shouldn't look like that. They should look a little bit different. Anyway, okay, let's see if the pound dollar gives us, okay, these candles look a bit better. Okay. So what we're looking for is, just like I said earlier, to join and find strong trends. Okay, but sometimes they can be even short trends. The idea of this method is to join the trends as they form, or when they're already there and you just want to add up, scale in. So I'll show you different scenarios of this method, and remember we're looking for trading with the trend. Okay, so the home baseline, okay, this 144 moving average will be the reference point for us. Okay, as long as the shorter moving averages and the price are above it, we're looking for long trends or long trades. As long as the price and the moving averages are below it, we're looking for short trades. Now, you know what, let me just change it to 15 minutes just for the sake of example, because the 5-minute chart really looks bad. The idea of this method is to find areas where you have where you have the trends forming and continuing. And when I say forming, usually I mean when the 5 moving average and the price cross the home baseline. Okay, so we're looking for these crosses or for continuations, but let's start first with crosses. And these crosses tell me that the trend has reversed. Okay, a trend reversal. So for example, here it goes above the home baseline and the moving averages are above it with the price, and then it crosses here. Okay, and this area gives me the mark for reversal. Now, what I'm looking for is for the price to be below the 5 moving average, the 5 moving average, the 5 EMA, okay, EMA 5 here, below the home base line, okay, the 144, also crossing down. And I remind you that these 3 moving averages, okay, let me just mark this area, these moving averages are all shifted. So for example, you see here that this candle, okay, we look at this candle and we see these moving averages already shifted 3, 5, and 8 candles into the future. Okay, so when we look at this crossing here, let's say we saw this candle, okay, and I look 1, 2, 3 candles, I see this yellow line, this yellow, let me just you know what? Okay, so I see here, let's see, 1, 2, 3, okay, this point here, and 3, 1, 2, another one is the red line here, okay, 2 candles in the future, and sorry, and 1, 2, 3, that's where the blue moving average is. Okay, so we have 3 moving averages, 1, 2, 3, already in an angle, already separated, moving downwards with nice angle, nice separation, and of course the order. Okay, they're all in order, so the faster 9 is below the 13 and then below the 26. So we see here 3 moving averages already in good order, separation, and angle. This is where we're looking to go short. Okay, this is where we're looking to go short. Either I probably wouldn't go long here because we may see this reversal candle and we still have some support level, but after we see this candle here breaking, okay, and giving us confirmation of this reversal, then we can start entering with short trades below the 5 moving average. And just like I said, the 5 moving average, the 5 EMA here, serves as the strongest resistance and as the strongest trend, I would say trend indicator. So as long as you're here below this 5-moving average, you may start entering, and you can see here how the price keeps checking the 5-moving average. In this case, we have about 50 pips, okay? And you may, if you have a strong trend, you may scaling in when the price returns to the 5-moving average or the 9-moving average and shows you a continuation of the trend, okay, trend continuation. So for example, let's say we entered around here, okay, let's say we entered around here, and we have about 20 or 30 pips already in our pocket, or about 20 something. You see the price returning and then maybe giving us a reversal signal. As long as you're with the trend, you may scale in with another trade, and then let's say you exit somewhere around here. You have about 40 pips plus 20 pips, gives you 60 pip profit out of let's say 50 pip move. Okay, and when the trends are when the moves are longer and stronger, you may take hundreds of pips out of a shorter move. Okay, so let's say from a 100 pip move, you may take 200 pips. But we'll discuss this later. So basically, this is the 5-moving average here with the 3 moving averages in order, separation, and angle. All below. Now the 5-moving average and the price have to be below the home baseline. The other 3 moving averages don't have to be below the home baseline at the beginning. Okay, remember, they're slower. It may take them more time to move, and you see here that, for example, the 26 moving average crossed below the 144 EMA only at the end of the trend, okay, or at the end of the move. So don't wait for these to cross down as well. Just the 5 moving average with the 5 moving average and the price. Okay, now where do you exit after you entered this trade? You can exit if you see strong support. Okay, it may be even from previous areas of support. For example, you can see around here. Okay, this whole area of support. So you see here an area of support that makes the price reversal here. Or if you see, and I always add to my charts, as you know, at least one oscillator like the stochastic or the MACD. Okay, so you see here a double bottom here with, well, sort of a double bottom and a slight hint of divergence. So this may also give you a warning signal. And of course, when you see this spaghetti zone, this consolidation zone here, we don't know where it'll go. Okay, it may continue going down, further down, but as long as we're not sure and we don't want to lose all the profit we have, then it's better to just take the profit here and wait for another trade. Okay. Now, this is a good example of the price crossing with a decisive candle. Okay, and we can see here another potential trade. Okay, let's see if this trade can also work. So we see here the price crossing above and the 5-moving average crossing above the home baseline. And let's see when let's say we saw this candle here, 1, 2, 3. That's the first moving average. Okay, 1, 2, 3. 1, 2. Okay, 1, 2. That's the second, and 1, 2. Another one here. So basically, if you if you say, okay, maybe we have here a potential, and we'll check trend lines and other things too shortly. But if you think that there's a potential trade here and you enter, okay, let's say you entered here and you place your stop loss somewhere below this this home baseline, okay, either you're stopped out, or in this case, when you see where you see the price returning without giving you the strong moves like we saw here, okay, the 5 moving average for some reason doesn't give us any support, okay, and we saw this decisive candle, but the first moving average, the 5 EMA, didn't give sufficient support, even not at the beginning. It's a warning signal for you, okay, and you see these indecisive or hesitation candles, then just try to close out with a break even or a small profit or a small loss, okay? When you don't see the strong or decisive move after crossing the home baseline, then this means something is wrong, and it's better to go out, close the trade, and wait for another signal. Okay. Now, obviously, in this case, we see also that there was this trend line here, okay, from this downtrend, and here it served as resistance. You see here twice, okay, here 1, 2, and here again this beautiful resistance and dropping. So be aware also of the general trend, obviously, and of possible support or resistance areas. But again, even if you enter and it doesn't go your way or it doesn't show strong momentum, you can always close out and wait for a better momentum. And okay, in this case, for example, it crossed down again. Let's say we see this crossing candle. Let's check 1, 2, 3. That's the yellow, the red, and the blue. I'm not sure the order. Well, maybe the order here is okay, but the angle is obviously not very good, especially on the longer moving average, the 26, and the separation is not very good either. So I'm not sure I would take a trade here. Okay. Let's look for another trade here. Okay, the 5 moving average, the 5 EMA crossing above the home base line. Okay, the 144 crossing above it, and with a strong decisive candle. This was after the announcement from the European summit they had there on Friday morning. But you can see the 5 moving average crossing above. If you take the trade even around here, you know that 5 moving average gives you strong support. Okay, you take the trade, or you wait for some retracement, okay, because it's a bit further, it's a bit far from the home base. If you wait for a retracement, then obviously you miss this move, at least the first move. But if you do decide to take this move, then you can see that you have the 5 above the home baseline, and obviously you see here good angle and separation from these moving averages, which are shifted. For those of you who may have missed this first move, you can always wait for, just like we spoke several times on consolidations after strong breakouts, consolidations and continuation of the trend. And in this case, we can also see that this continuation was on the trend line, which was first, I remind you, resistance, and then served as nice support. Okay, so we have support from the 5 EMA, from this trend line, beautiful support, and another move here of 80 pips. Okay, so there's a nice move here. Just a second, please. Excuse me. Okay. You see the Aussie dollar did find support here. I'm just want to see. Oh, okay. So we have here interesting support and reversals from some of the. Yeah. Sorry. Where were we? Yeah. Okay. So you see the continuation, and let's look for a few more examples. Okay, now, so these were the first trades I was talking about um, with price with crossing of the moving averages. Okay, crossing of the 5 moving average, how when it crosses the home base line, and let's talk a little bit about trend continuation rather than trend reversal. We're looking for to enter trades in trend continuation where we're still above, let's say we're still in an uptrend above the home baseline, and we see again the order separation and angle with candles. Now I remind you again, this trading method is originally for the 5-minute chart, but again, for some reason the 5-minute candles here really look choppy. I don't know why. They don't look like real candles. They look like they're missing. But again, let's you know what? Let's take an example here. So for example, let's say we entered here with this nice trade, okay, crossing down, taking whatever we're taking, and then we're looking for continuation. So continuation can be either when the price finds resistance from the home baseline, and then continues either from the home baseline, or you see that the 5 moving average and the other moving averages consolidated and then continued. Okay, it doesn't have to go back all the way to the home baseline, and sometimes it may even cross the home baseline and come back again. But let's say we have some consolidation or checking of the home baseline and then continuation. Once you see areas where the price finds support or resistance from the moving averages, and you see good order, angle, and separation, just like in this case, okay, around here. We have already the angle, we have the order of the 3 other moving averages, the shifted moving averages, and we have the good angle and separation on all of these. In this case, you may look for scaling in, okay, for trend continuation. And it's up to you. It depends whether you wish to enter where you see resistance around the moving averages, meaning, for example, around here. Okay, you see this area of resistance from, you see these wicks. Okay, the price keeps stopping at this resistance area. We from the 9 moving average, and maybe the 5 moving average, or the 13, but there's resistance and the price starts moving down. For those of you who are more aggressive, for the more conservative ones, you may wait, for example, for a breaking of a support, or if it's an uptrend, for a resistance line. For example, here it broke this support line. It's still below the 5 moving average. You see this confirmation candle, and you take another trade here. Okay, and you see another resistance here, this candle, okay, this short candle, and you may take another trade here. Okay, another resistance around here, another confirmation candle, and another trade here. Okay, so as long as the moving averages have good angle, good order, good separation, okay, again, order, angle, and separation, as long as they have all this, you may continue looking for additional trades to enter. Whether you wish to exit where you think you should exit, okay. If you want to exit and then wait for retracement and enter again, or leave the trades, okay. If you think it's a strong move and you want to leave the trades and set a higher stop loss somewhere, okay, as long as you don't turn all your winning trades that you left that you previously left, you don't turn them into losers, okay. But you keep scaling in or entering new trades and closing where you think there's support or resistance in an uptrend, as long as the moving averages have good order, separation, and angle. Okay, areas where you see consolidation, okay, where you see the moving averages start forming consolidation, spaghetti zone, or more divergences. Okay, for example, we have here these three lows, 1, 2, 3, and we have here 3 divergences. Okay, these are the areas where you should start closing your trades or moving your stop losses much closer. Okay, so so these are the basic rules for using these moving averages. Again, 5 EMA, okay, 5 EMA, 9, 13, and 26 EMAs shifted 3, 5, and 8 shifts, okay, and the 144 EMA thicker and used as home base. Okay, you can see here this nice crossing. You can see here, yeah, I think that was Friday. That was Friday morning with a breach at before AM. Okay, let's look for another or a few more signals. Here, for example, you can see this possible uptrend. Okay, the price crossed above. We have here good angle and separation in order. Okay, here, for example, the price crossed below, but we see here this spaghetti zone or this consolidation zone, and we see here that the angle of the moving averages is not very good. Okay, they're not tilted nicely, and I remind you that when this candle, for example, crossed below, these moving averages were somewhere here still flat, okay, because they're shifted, okay, they were still flat. Here, for example, that's a trade that didn't go very well, okay. It may have been, for example, you waited, you entered around here, and it gave you barely, not even 15 pips, okay, and started moving upwards. And you see here that the 5 moving average didn't give you the resistance you expected, okay, like here. Here it gave a resistance, and then it continued moving up, and instead of continue moving down, this means there's some strong support here, and the trade is not going very well. And that's the good thing about the 5-minute charts, that if the trade goes well, you'll see it quite fast. You'll see it immediately. If it doesn't go well, if the trend is not strong, then you better bail out. You better close your trade with a small loss or a small profit. For example, if you enter here at the end of this candle, and you see this candle closed above the moving average, okay. In this case, I guess it's just break even. You know, the 3 pips or 3 pip spread on. Oh, this is the pound dollar, so maybe just, you know, break even or a very small loss of 1 or 2 pips. But you should see strong momentum. Okay, quite from the start. Okay, if it's a reversal, if it's a continuation, again, it may take some time. after consolidation or after it hesitates, you may see some hesitation and then continuation. But if it's a reversal, be more careful. Okay, for example here. Okay, well, these are late hours already. That's the evening. I wouldn't trade in the evening. I would wait for the middle of the day or the morning, for example, here. Okay, so this is a nice area where you see the crossing, okay, and then continuation. This candle here is a nice candle after breaking out from this consolidation zone, giving you the 5 EMA below the home base, and then the 3 other moving averages already in good angle, separation, and order. Okay, and you see here this nice move of about 30 pips, and you see how this moving average gave you strong resistance. Okay, and even if you hesitated here, let's say you saw this candle here closing above the moving average, and let's say you decided to close this trade, and then you saw this candle and even this candle, you can always re-enter and still take a few more pips. Okay, but again, we have this breakout from the consolidation zone, which should give you stronger move, especially with these moving averages all sorted out, in nice order, angle, and separation. So this is what I wanted to show you about joining the trades. You see here a beautiful trade, okay, with a beautiful trend, and okay, you see here the price checking again, and here, even if you want to re-enter the trade or the trend, I wouldn't expect you to know ahead of time or in advance that it's going to stop here and then enter. But even if you enter somewhere here, okay, we had support, the support broke, came back, okay, we have support breaking, returning, checking the support, having resistance from the support and the moving averages, which are already in good angle, separation, and order, and you join the trend. Okay, and again, remember, give the trend some time to evolve. Okay, don't expect the trend to give you 100 pip candles immediately. Okay, so give them sufficient time to evolve. Especially if you see such a nice angle of all moving averages and such a great separation. Again, okay, give it the chance. What does it mean, home base? Is it a moving? Yeah, the home base. When I say home base, I mean this 144 moving average. I call it the home base because the price tends to return there. Okay, like it's like the home tends to find support or resistance around this this trend line. Okay, I'm just calling it the home base because it's, for us, it's, where we leave home. Okay, where we leave home towards our journey. Okay, the trend. We leave the home base here. We cross it, or we leave the home. We leave home, or we return back to it. Okay, and then maybe leave again from it. So this is the home base. I just call it home base. That's it. So this is what I wanted to show you. Let's take a peek at the pound dollar. You see, even though it broke this support line, okay, eventually this long doji here gave a nice reversal, and eventually did went up again. I guess on the hourly chart you see this support line, all this area still holds, okay, still holds. It may take it maybe a few more candles to break. I don't know. We'll see. We'll have to wait and see, and maybe it'll go all the way up again. The Aussie dollar, as you can see, found support again on the 52 moving average, and we used this trend line yesterday, okay, and I showed you this yesterday, so now I guess I'm showing you this too, okay. But again, trend line and moving average 52, a beautiful support here with 20 pip move, okay, 1 hour 20 pips, and you see this nice reversal candle, okay. Look at this nice reversal doji and an upward move of about 20 pips in an hour or 45 minutes. This is it. This is it for today. This is it for this week. I hope you enjoyed it and learned a few more things, and I'll be happy to see you again next week on Monday, and I wish you good luck with the rest of the week. Good luck with your trading, and trade patiently, trade well, and with discipline. So thank you very much. You're all welcome to send me emails if you have any questions or need any indicators or anything like that. And I'll be happy to see you again next week. Thank you very much.